Hey everyone, Gil here with GTrader Pro and CrudeTrader Pro, and this is our weekly wrap-up for our CrudeTrader Pro trading strategy. This is week number 3 for us, and 3 weeks ago, just as a reminder, we started out on a mission trading a prop account, exclusively trading crude oil, at times micros, at times the full mini contracts, but trading exclusively crude oil with the purpose of illustrating a particular technique, high probability, very consistent high probability returns, and how to utilize crude oil to pass an eval and get funded and then continue to trade that funded account to pay out. This is, of course, our CrudeTrader Pro website. You can check this out here and learn about the CrudeTrader Pro course. So all I'm going to illustrate here is one buy or one sell level, one level to go long, one level to go short, one simple trading strategy. And you can check out the site for yourselves here. I'm not going to walk you through everything, but very extensive description of what we do with CrudeTrader Pro, and you can check out the course here. You can also, of course, come in and join our Discord server free of charge. But let's get that out of the way and let's go right to our Discord server. And let's take a look. This is the week, of course, of February 2nd, February 3rd, 4th, 5th, and 6th. Every day in our Crude Signals channel. This is where we're posting crude signals that are using only one strategy, the strategy that we teach in the CrudeTrader Pro course. And then we'll take a look here at the at how each signal played out. But once again, you can see each of the posts that I put out, the time that I put them out. For example, on February 2nd, we said at 7:45, buying at or near 61.70. I will allow for a 35 tick stop. 61.70 also that day, posted at 8:25, also good. Or I made a comment, 61.70 good for a 20 tick bounce so far, just like we taught. And then 61.32 to 61.25, another long entry using a 35 tick stop. And so every day we post very publicly what the trade is. There may not be a trade every day. Sometimes there's two levels that we can utilize, as there was here. Now, depending on what I have going on personally, I put these out in the morning. I may or may not be able to trade them all, but these are the signals. So let's take a look at how the signals played out each day, and then we'll take a look at the results that I was able to achieve this week for the trades I was able to partake in. Keep in mind, I'm running a live trading room, trading multiple accounts, running 2 trading rooms simultaneous, taking multiple trades in multiple accounts. So I'm not always able to participate in each and every crude trade, although we try. Let's take a look here at Monday, February 2nd. Now, this happens to be we're using a chart of CL. This is a 15-minute chart. You'll notice that this is a RTH chart, just to eliminate the Globex noise. Now, there's going to be times where we do get a trade in the pre-market. Most of the time, I'm focused on what we call the pit or RTH hours, 9 a.m. Eastern to 2:30. There will be occasions where we take those trades before the market, before 9 a.m. and after 2:30, but most of the work here is done in this period of time. Let's take a look. Here's Monday. I've got the level marked at 61.70, as noted here in the Discord channel. Long at 61.70, allow for a 35 tick stop. Now you'll notice there was very near touches here, and it took really to get a full touch of the buy level. Took until about 12:30, and then it did provide for a reasonable bounce. This happens to be about a 35 tick bounce. As we can see, this swing high of this bar right here was a little, close to 62.10, 62.07. So from 70, there was at least the opportunity for a winning trade. So make note, that trade worked, no stop. And a trader had easily, as we like to instruct, 10, 20, 30 ticks. Love to take scale out on our way to potentially a bigger target. But here we had ample opportunity to pick up 20, 30 ticks on the trade. Later in the afternoon here, going into the end of the full RTH session, you can see another attempt at 61.70 with a little bit more of a spike in it. But this is about 15, 16 ticks of drawdown, nothing significant. And then we had a really nice pop, so almost good for 50 ticks. So this was the buy price, 61.70. Again, you can see it posted here, 61.70. Allow for a 35 tick stop. That price was put out at 7:45 a.m. When the market opened, it was at 62.44. Now, just out of curiosity, how could I know that at that point in time at 7:45 in the morning, that if we got to 61.70, we would catch this bounce? And this made for a very good buy level. That's part of the course that we teach. What is it about this price that is so compelling that the market would take this kind of response off of it? But that was Monday. Nice opportunity. Let's move on to Tuesday, and we can see the down arrow here. This was the sell level. Now, the sell level posted on Tuesday, February 3rd, was short at 62.94 with a 35 tick stop. Let's see how it played out. 62.94 is right here, the blue line in the middle, 62.94. And we can see that the market hit that price, did spike it up to 63.12. 63.12 right here. They did spike up, didn't hit the 35 tick stop, and then had a nice decline back down to 62.54. So once again, without the stop out, the trade would have provided at least about a 40 tick trade. And again, we like multiples of 10 and 20, and we can see here that indeed crude offered 40 ticks on the downside. It did actually trigger again here at 62.94, and once again you can see the market respond to that price. It triggered here again at 62.94, and once again came down to 62.56. Each time that price was hit, it offered about a 40 tick reaction to that price. Then finally, if you shorted it on this bar, yes, you would have stopped out. Now, I typically advocate one, at most 2 times at the level. So I'm not going to sit here and say, hey, we traded this 3 times and took 120 ticks total. No, I'm usually 1 and done, 2 are done. I don't like to work the same level 3, 4 multiple times. Generally, that's an indication that the market is going to break that level. But if a trader did take this for the first time, if this was their first time, they did stop out, obviously. And so there could have been a stop out. But if we traded it exclusively 1 or 2 times, we did quite well. Now, what's interesting is crude only pulled back 40 ticks. That tells us something about crude. So the price worked out very nicely for some positive trading and some profits. But the pullback was only 40 ticks. We talk about that in the course. And lo and behold, later in the session, it certainly popped. Let's move on to the 4th over here. February 4th, I wrote short CL at or near 65.60. Let's take a look at 65.60. It's way the heck up here. Now, 65.60, and we can see that that's the short level. I'll put the cursor right there, 65.60. Anybody working the exact price of 65.60, it came up short of that by 6 ticks. So that's really, on that particular day, it's really a no-fill. So we're not going to take credit, but I want you to note how well that price, they were front-running that price, and the market really had a nice little snappy pullback down for almost a full handle. That is more typical of what a really good level that's going to hold will offer the trader. Referencing the 40 ticks, only the 40 ticks over here. Again, this is because the market was in a really strong position, and that strength manifested itself the very next day. You could see it. This is why crude only pulled back 40 ticks off of this level on the previous day. That strength came out, but when they got very close to that level, you can see the rejection. Now, again, we didn't get to trade that because I was working 65.60 firm and didn't get filled on that particular trade. But once again, you can see how good that level would have worked. Someone was front running it a few ticks, then they did quite well. Thursday, February 5th, buying 63.13, 30 tick stop. Let's move on and take a look at the green arrow here. All right, 63.13, as noted, buy 63.13 with a 30 tick stop. If you bought when the market opened, the market came down, the market opened up above it and dropped down to 63.13. And we can see here a very minor drawdown of about 10 ticks. And again, a nice response, nearly 50 ticks. That was a nice trade that I was able to jump in on. Notice the next time down, however, 63.13. Again, 30 tick stop. 63.13, if you took it the second time, they stopped you out with a 30 tick stop. No doubt about it. All right, just barely stopped us out. 63.13 gets you to about, at most, 80 for a 30 tick stop. And you can see here that they came down to 68. So that would have been a stop out. And I believe I put that trade on for the second time and did take a stop out here. So this was generated a loss on the second time. As we just finished talking about earlier, I'm okay taking it one or two times. And here again, that strength showed up finally, and they went down to the previous level of 62.70, which you might recall, and then they ended up bouncing really nicely. Obviously, with a wider stop, the trade would have worked, but 30 tick stop stopped out. Once again, they got back above 63.13. We're going to talk about that, and look what happens when the market gets back above 63.13. It really does technically trigger a whole new long entry, and that would have worked out quite well. But we were done with that after this pullback. Let's take a look at Friday. Friday was a very interesting day. Buy 62.70 with a 30 tick stop. Now, you'll notice that the market opened below. Here's the market open, and this is why we like to wait for the pit to open. Notice we're below 62.70 at that point in time. And the first 15 minutes closed back above 62.70. Now, we were in the live trading room, and everybody who was in the live room heard me say on mic, hey, they just closed 15 minutes above 62.70. We're going to buy it. And they heard and saw me buy crude at 62.70. We bought it on this bar right here and took a really, really nice trade. This is what a high probability trade at a really good price is going to do for you and your account. So I really participated quite heavily on Friday and had a really nice profit. And you can see this wonderful, wonderful response. Now, there's a lot going on geopolitically, certainly, with crude at times, but the technicals will always bear out to be correct. So again, there was a little bit of a stop out here. If someone took it the second time, this was a winning trade. This trade did not get filled. This trade worked, all right, to short, and it ultimately stopped out if you took it multiple times. And on Monday, the trade offered a winning trade several times. So over the course of the week, a really good winning percentage. If you took every single trade, and I'm not saying that I did, but had a trader taken every single trade at every single opportunity and really continued to work it, they had wonderful opportunity to have a good gain during the course of the week with a couple of stop outs along the way. Risk management, trade management is paramount. All right? So each and every one of these trades uses the exact same approach, the same methodology. Nothing changes. It's not like, hey, today we're going to use this, or we're going to look at VWAP, or we're going to look at a moving average, or we're going to look at this. These prices are all known by the student who takes the course long in advance, sometimes days in advance. We can set up these trades and say, hey, I'm not sure if we'll get the opportunity, but if we do, like for example on Monday, I wasn't sure that we would get the opportunity to short 60 to buy 61.70. I simply said if we get the chance, we want to go long. Crude easily could have just rallied, but it didn't. It came back and tested this level. You see? I couldn't say for sure that we'd get the opportunity. Crude opened up here, gapped up. It could have easily come down and filled the gap, but it didn't. It gapped up and it kept going. And I knew well in advance that if we got an opportunity here, there'd be a reaction. Same is true of this price. See? I couldn't be sure. Let's take a look at this one by, for example, 65.60. Short at or near 65.60. I posted that at 1:37 in the afternoon. I was sitting here watching. I couldn't know in the morning that I'd get that opportunity. But when we did get that opportunity, I certainly recognized that this price is an extremely good price to short the market at. So this is just an example of what a trader can know well in advance about crude oil. It's taught in the course. It's extremely provocative and intriguing. I encourage you to check it out on the website. Please come in and join our Discord server and continue to follow us on this journey on YouTube, where we'll post our weekly results. We'll show the trades, we'll show the posts, we'll show how it played out on each and every signal, whether I traded them or not. We'll show each trade that was called. And then finally, we'll take a look and say, how did we do for the week? Now, I've summarized it. Traded a total of 31 contracts between minis and micros during the course of the week. This is a weekly summary from February 2nd to the end of the week. Cumulative net profit for the week was $842.25. The gross was $1402. You can see I did take some losses, $560. So the net was $842 for the week. My max drawdown was $222. All right. My average loser on a contract was $62.22. All right. There's my largest winner, 178, and my largest loser, 117.50. But that a nice net. Did take some losses, as I said. We did have some stop outs. All right, so I did experience some stop outs, but I was able to trade and end up with a very nice week result. So we continue to do well in the account. We're making progress. You can go back and listen to the previous 2 weeks, and you can check that progress. We started 3 weeks ago, and this was a very good week for us. So I encourage you to check it out at gtraderpro.com. Please come in and join the server and see for yourself what we're doing. All right, what we're doing with crude oil. We do trade other markets. We have a live trading room. You can come in and take a week free trial, no cost to come into the room for a week if you'd like to see the live room. And again, no cost to come in and join our server. And then on Fridays, by the way, Friday, you could come in and check out, once you're in the server, you can come in and check out our Free Friday levels. I posted on the ES, NASDAQ, our Ultra indicator and buy and sell levels. I also each day put out a morning brief. On Friday, it's free. And here you can come in and listen to this recording where I talk about the ES, NASDAQ, and crude hours before the market opens and give you my trade ideas and my expectations for the particular market that day. Friday, if you come in Friday was a very, very good day for us across all three markets, NASDAQ, S&P, and crude that we focus on for live trading. So please come in, check it out. Really appreciate you doing so. And hope you've enjoyed this series. Continue to watch our progress. Come in and join the server. Reach out to me. I'm Gil. You can ask me questions. You can send me a chat message. I'd be happy to give you more information about the course if you have any. And again, enjoy the weekend. Enjoy the video. I'll see you next time.